Hello, hello, hello. How's everyone doing? We are back for another week of Mortgage Market Movers Weekly. Took a little break last week. I was in the land of the rising sun, but I am back in the good old US of A. All right, so we are going to get you caught up on everything that's been going on in the market. We're going to take a look at the US 10-year yield, see if it's up or down. Should you be buying a house right now? Answer is always yes. Just kidding. But we are going to see what's been going on in the market. We have the Federal Reserve has their FOMC meeting where we are going to see if Jerome Powell, the chair of the Fed, is dovish or hawkish, whether we are looking at more rate cuts. Of course, that means bank interest rate cuts, or if we're looking at rate hikes or rate pauses. Stocks still haven't been doing too great. Conversely, bonds have been doing better, which is bringing that 10-year yield down. TLDR, before we jump too far into all the data, in case you don't want to watch the rest of the video, as of March 6th, I believe that the average 30-year fixed rate, according to the Fed, was 6.63. It looks like as of March 13th, it has bumped up about 2 basis points, 6.65. It is still on a downtrend, so mortgage interest rates do appear to be coming down. All right, so we are going to hop into the charts and see what the data is telling us at the US 10-year. So, like I said, around March 6th, the 30-year fixed rate was about a 6.63, and it has climbed up to about 6.65 for the average 30-year fixed mortgage rate. Now, the US 10-year, of course, is just a proxy that we use for the mortgage rate. As we can see, it's really been dropping since January 14th. We'll have little uptrend, and then it goes down. But overall, it's been dropping. And that's because the stock market is not doing too hot right now, and the bond market is starting to pick up. So if we look at the bond market, which is this blue line right here, we can see the inverse relationship between them. As yield is up, bonds are down, and vice versa. All right, so now let's hop over to the economic calendar. So let's go back a couple weeks. So we look at March 2nd to the 8th. Let's see what we had going on this week and what is pertinent to us. One thing to keep in mind is it is important to be looking at these unemployment claims, jobless claims, anything that has to do with unemployment. The Fed has a dual mandate where they want to minimize unemployment and bring the inflation rate down to their neutral rate of 2%. So there's kind of a balancing act right now, and we can see the unemployment claims have been coming down to 21,000, previous to 42,000. The unemployment rate, so that was claims. So the claims are down, but the unemployment rate is up. And I believe this is month to month. Yeah, from the previous month. So, interesting data right there, because I would not expect that. But that's what it is. So 4.1% for the unemployment rate. Another thing to look at that's fairly interesting is consumer credit. So we can look and see that credit has been going down. Previously, it was $37.1 billion. This is month-to-month, of course, $18.1 billion for actual month-to-month. And, you can look at this and say that people are spending less. You could also just say that, on a more optimistic note, that credit is being paid off. I don't think that is the case, though, because I believe that delinquencies have been on the rise. Let's see. So this was last week. JOLTS job openings is always important to look at. This is the month-over-month list of job listings that have been posted. And this is 7.74 million. Previously, it was 7.51 million. So more job openings, more job creation. That's always a good thing. This is a pretty important thing to look at for the overall economy is CPI and PPI. CPI being Consumer Price Index and PPI being Producer Price Index. Now, what these are is they look at a basket of goods from the consumer side or the producer side. And you have core and you have normal. So core excludes any kind of volatile goods such as food or energy. So egg prices will not be included in the core. And then you can see that reflected in the CPI. And we have month over month and year over year. So inflation has been coming down month over month and year over year. So previously it was 0.4%, and this month over month number is going to be for February. And actually it was 0.2% for both core and non-core CPI. If we look at year over year, we see 2.8% for CPI versus a 3%. So it does look like inflation is better than it was. Still, not great, but it is better than the forecast and previous. If we look at PPI, we actually had a negative 0.1 as opposed to 0.5 previously. So that's really good. And then that was for core, non-core, 0%. So on the producer side, it looks like prices have not been rising. And when we get unemployment claims, 220 versus 222. So again, unemployment claims are coming in lower month over month. When we look at this week, we had core retail sales on Monday, and those came in at 0.3 versus negative 0.6 last month. Now, this is pretty important to look at, right? So one of the things that has been on economists' mind lately is a potential recession. You've heard people in the administration even kind of allude to a potential recession. And retail sales is going to show is there growth? Are people still spending money? And it looks like that is the case, right? At least in February. So we had core and retail sales. I'm not sure what the core, let's see, core just excludes automobiles. Okay. So people are still spending money. That is good. We also had building permits and housing starts. And housing starts, this is going to be interesting to look at. This is the number of new residential builds that began construction during the previous month. So we have 1.5. So it looks like more houses are being built. That is good news. Now, today, Wednesday, March 19th, today's Tuesday. Tomorrow, March 19th, is the FOMC meeting. Now, this is a pretty important meeting, and this is the Federal Reserve meeting where Jerome Powell will give a press conference at 2:30 p.m. This is so important because Jerome Powell is really going to, the analysis of this press conference is going to let investors and people placing their money into various investments, it's going to let them make a prediction whether or not the Fed is going to be dovish or hawkish. What that means is, are we getting more rate cuts? Are we getting rate pauses? Or hopefully not, but rate hikes? Okay, and when we talk about all of those, the rate is for the federal funds rate, which is like bank interest rates, right? So we really want to see what Jerome Powell has to say at the 2:30 p.m. Press conference. That's Eastern Standard Time, and right now the market is pricing in 2 rate cuts. Should we get anything less than 2 rate cuts, be pretty bad for the stock market, good for the bond market, which could potentially bring that U.S. 10-year yield down, which would lower the 30-year fixed. And then Thursday, we have existing home sales. That's always good to look at. We also have the unemployment claims. Now, just to go back to the 30-year fixed. So like I said, March 6th, it was 6.63%. It has ticked up about 2 basis points to 6.65. Not a big deal. Like I said, we have been in a downtrend ever since, let's see, January 16th, it was 7.04 for the average 30-year fixed rate. We can also take a look at median sales price of homes. Now, this is quarterly, so we won't be able to see quarter one, but we can see in quarter four. The median sales price did tick up a bit. I would expect that to come down. I think that inventory has been sitting for a little bit longer, and I think that supply is up and demand is a bit down, just anecdotally, but we will have to see what the data says. All right, that's all I have for you. So we caught up for the past couple weeks. If you guys have any questions, be sure to let us know in the comments section. If you would like a home loan or are interested in refinancing, of course, check us out at mortgagesbylynda.com. We have an easy apply button right here, contact button right here. Find us at mortgagesbylynda.com or give us a call at 877-TEAM-MBL. Okay, have a great week.